Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stock miner, Brian Johnson. And we had a pretty sizable move last week to the downside. Lots of volatility on options expiration made for great intraday trading and even some swing trading if you held short. Although, you guys know that I don't typically like to do that on options expiration weeks, but whatever. To each their own. There was money to be made last week to the bear side. Now, here's the question I'm sure everybody's asking this week: are we in for a bounce? Are we bouncing? Is this it? Friday we saw a big gap down, a move up, pull back most of the day, and another move up towards the end of the day. So I started looking at the charts this weekend, and guys, from an unbiased, just stepping back, looking at the charts, uh, there's nothing broken from the bear side. You guys heard me say for days and weeks, nothing broken from the bull side. Let's stay long. Nothing broken from the bull side. Let's stay long. Now you're going to hear me say there's nothing broken from a bear side here. So we have to continue to look to the short side until we get some sort of confirmation that it's time to go higher. Yeah, it was a great run on Friday, you betcha. And it's exactly what you would expect to see at the bottom of a move. A gap down followed by a nothing but, buying most of the day. It's exactly what we saw. So, yes, of course, we can be expecting it. We can be looking for it. We are down quite a bit over the last even 2.5 weeks. Is a bounce coming? Sure it is, you betcha. But it's always like everything else a matter of when. It's amazing to me how we'll get 3, 4 days of bearish movement, and all of a sudden everybody wants to go long. We, but nobody wanted to go long 2 weeks ago when the market was going nothing but straight up. Everybody wanted to go short. So at what point do you actually rationalize? Okay, here we go. This is what we're going to do. That comes with just allowing the charts, backing off, taking a bigger look at the charts and saying, listen, where do we go? When do we go? So I have to ask myself that all the time. Where do we go? Long or short? When do we go? Long or short? And right now, there's nothing broken from the bear side, so I'm willing to stay neutral to bearish coming into Monday. Why? Because I have to. That's what the charts tell me. That's what the charts tell me. So where am I looking at? Okay, well, we have all these moving averages. This will be a big theme. Okay, watch your moving averages and look at this overhead resistance line that I have drawn in here. All these are going to meet right around the 10,350 area on the Dow. That's where you're going to want to be watching this area. So you want to push above 10,400, maybe even 10,500 before you even start thinking about getting long this market. Will you miss maybe a couple hundred points in between? Yeah, you will. But from a more conservative standpoint, that'll be one of the better places to go, is up above this 10,500 level. Daily, you can see us in this big free fall to the downside, bouncing perfectly off this lower line down here. And now we're going to be watching closely this 200-day moving average. Will it last? Will it make it? Anybody's guess, but this has got to be a place that the bulls got to get above and hold ultimately if we're going to see any kind of bearish action coming into the markets. But now we're down quite a ways. It's just a lot of work for the bulls at this point. So if you're going to go long, fine, whatever, have at it, your money, but you need to be very cautious going long because it is still a bearish move here. It's still bearish down here. NASDAQ on a 60-minute looking the same way here. Got this level here we're looking to get above, and ultimately this blue line gives you pretty good ideas of when to get into the long side again from a NASDAQ. It's showing some strength by not closing below the 200-day for more than a couple of days. We got one close below it. Following day, the big gap down with a huge run up that got it right back up here. So here are your levels on the NASDAQ to be watching for overhead resistance and below us for support. We got to watch once again any pullback and this 200-day moving average. Let's see if that will hold for you. Right now, probably not the best place to be swing trading any of the markets. Intraday trading, and keep in mind Mondays have been good to the markets the last umpteen weeks. We've had a few down days, but most of them have been up days, so keep that in mind as we come into yet another Monday. Will the theme start to change for Mondays? It's anybody's guess, but until it does it on a consistent basis, we have to be a little bit cautious to the bear side and a little bit more optimistic to the bull side coming into a Monday, just based on previous experiences. Here we are sitting right on heavy support down here, looking for that break. Now that is a weekly, so we've got quite a few days to go before we know more on that one. Here's your overhead on the SPX 500. So here 11.10, I'd say 11.5 to 11.10, probably a safe place to start looking for entries. Even so, honestly, not even the best entries like above 11.10 or whatever. You've got this 20, you've got the trend line, you've got the 50, you've got a lot of work that needs to be done by the bulls in order to make it. So you want to be careful. If you want to take along over some of these moving averages, great, but you better have a tight stop on it. And you better be managing it well. And maybe even looking at just intraday moves for the time being, because there's still, at this point, really nothing broken from the bear side quite yet. SPX on a daily, same thing here, bouncing off this lower level. Beautiful bounce down here, coming back up to this orange line. But look, we're below the 200-day moving average. Still closed below it on Friday, so we've got a couple closes below it. We got a lot of work. Heck, we're still 15 points 15 points away from it. That's a pretty sizable move in the SPX. So we got a lot. The bulls have a lot of work to do if they're going to make this thing look at all bullish. So they have work to do. That's why I'm, suggesting you stick with maybe a more intraday type of a feel, just as we did last week. You'll want to be very careful of your positions coming into the new week. From a weekly standpoint, we dipped below but managed to close back above the 50-week moving average. So we'll talk more about that. We'll look at it during the week, but we'll talk more about it towards the end of the week. VIX on a daily, just keep in mind that we are in a quote-unquote red zone, if you will, for the VIX. Up in this area here puts us in kind of a, there's a lot of fear in the market type mode. That is a red zone for me. That could mean, if we're looking at overhead, quote-unquote resistance in the VIX, it's 50, up here at 50. But this, being as extended as it is, could lead us into a bounce scenario. If we continue down in the markets and the VIX continues up, I'm really looking for a hit, a touch, a something of this 50 area up here. That could be a big sign for you guys to start looking long or moving stops down on your short positions. A bounce in the VIX to the downside typically means the market goes up once the fear starts to come back out. I would expect to see that maybe part of this week for sure. We'll see the VIX start to drop a little bit. Maybe it's early, maybe it's late, still anyone's guess, but I would expect that maybe we'd see that VIX start to drop a bit sometime this week. And that would mean higher prices to come. Apple on a 60-minute, look at how it's buried below here. Got our line down here at the